Tim, it's interesting that you use the wording, it's a complex and confusing time, because for our viewers to understand, I mean, you've been in the market since the Drexel Burnham days. Might need to remind some of our viewers what that was and what it entailed. So maybe compare
1985.
now to then. I'm curious.
You know what? I got to tell you something. It's really interesting you'd ask that question, right? Because I've been obviously doing a lot of, thinking about all of this stuff and how things have changed, right? In terms of market structure, obviously the size of markets are, kind of mind-boggling, right? I mean, when we started in that area, I mean, I think before the first nuclear winter in 1989, 90 with, high yield, I think we were maybe 130 or 140 billion of, total par face value of debt. We're 1.6, 1.7 trillion plus the loan market, which is another 1.6, 1.7 trillion.
Mm,
So the scale of all markets are they are astronomical, right? You and I are watching this market. And I was like, was it Nvidia hit $1 trillion of market cap or something this week? I mean, what?
right.
You just they are staggering. But I think it's also how markets are working, right? I think this is the issue for everybody right now, including ourselves, right? As we look out, it's like, how do they function, right? And I mean, there is a lot of programming, that is done, whether it's, algorithmic, where you're grabbing headlines, et cetera. The amount of trading, right? Can you be a long-term investor? Can you be a fundamentalist, right? We were talking about this earlier. And, do markets ultimately care? And it's an interesting thing, right? Keynes had always said, markets can remain irrational longer than you can remain solvent. And I think that's kind of how, you kind of see things, right? So it's so big, right? And it's so, as I say, so automated now that it's going to be it's going to be interesting that
Mm,
it's fundamental analysis, especially in equities, right? It's not just data mining at the end of the day. Okay, P's are 18. Should they be 15? Should be the 20? Does that really matter? Obviously, it certainly hasn't. And you and I watch this speculative, kind of fervor with, whether it's AI or the flavor of the day, right? Whether it's the Bitcoins of the world. And it just continues on, right? You're just sort of rolling through all of this stuff and saying that, okay, well, we're going to really experience some actual pain. I'm not so sure, right? Because it's like,
mm,
again, yeah, I've done this discussion, Catherine, with the advisory community, right, where you're looking at it, going, all right, and our viewers and everybody has a an advisor, broker, whatever it happens to be, and you start to have those conversations, and you kind of look at where they're coming out, where their allocations are coming out, and they are what they are. They're looking at it, going, okay, if things get tough, you're going to see rate cuts, right? Because let's just deviate just a smidge. Here's a question for you, because I don't know,
mm,
how real estate is back east, but this is probably one of the most head scratching events from my perspective. Residential real estate. I'm in Calgary right now, but I mean,
yep.
it's trading, right? Things are getting bought. You look
Yep.
around your neighborhood, you look around the communities, right? And these things are getting bought in day, 2 days. Mortgage rates are, very high, right? You have the stress test on top of this. Prices are very high, right, on a square footage basis, any fundamental basis. We've done all the macro analysis on, on these areas, and you're looking at it going, they're absurd, right? It's the most overvalued real estate market in the planet, and it doesn't matter, right? So what is going on there, right? And the best that
Yeah.
I can do for you, Matt, is supply and demand, right? Where you're looking at it going, I know that we had 1 million people coming into the country last year through various mechanisms, whole other policy, problem, right? Because there's nowhere to put anybody. But that's certainly part of it. And then the other part of it is just supply and demand, right? As we talked about before, you didn't go through a massive overbuilding in the U.S. too, right? We didn't have much of speculative building, and so therefore, that seems to be, relatively balanced. But if you would have asked
Hmm.
me, a year ago, a year and a half ago, if we're going to 7%, 8% mortgage rates that real estate would hold together, I would have laughed at you, right? I was like, we're going to collapse. Well, we're not
Yeah.
collapsing. We're going higher, right? And it's just
Yeah.
so how do you come to an explanation, right? In terms of you've been in markets your whole life too. What are you seeing, in that regard,
Hmm.
and what gives with that, right? It is,
Well,
you've got obviously
yeah.
it,
Well, I mean, you probably, we have a strong employment picture, so that obviously helps. If that cracks, that'll be the issue. But the other aspect
yeah,
is TransUnion data showed that Canadians are taking on more debt. It's an all-time high of $2.3 trillion dollars in the first quarter. So, taking on more debt is obviously, continuing to fuel people's personal balance sheets. But But I
Right.
hear you, and I also the Wall Street Journal had a really interesting article the other day, just taking a look at why the markets seem to have this kind of floor to them. And part of the reason is to your point, whether it's algorithmic trading or quant trading, that just come and buy if they see a certain signal. So, I do and still believe very much in fundamental analysis in terms of actually stock picking, and I think that that will come at play. But the question is when. We'll take a quick break. We'll be right back.